Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.
Welcome, everyone. This is Steve Meisinger, your host for today's ISE webinar. I'm happy that we have Jack Crooks with us. Jack's going to be talking about intermarket relationships, why it matters to currency investors. He'll be talking a little bit about the financial markets and the real economy. Why does it matter for currency investors? Jack has spent over 20 years in the markets. He is the president and founder of Black Swan Capital, and he writes a newsletter each morning with his son. You can go to blackswantrading.com to learn more about that. He's very in tune with correlations with the equity markets and the U.S. dollar. He also looks at a lot of the other markets, and he'll be talking about that. So Jack can provide his insight on how investors can use these tools to help forecast currency movements. Jack spends a tremendous amount of time writing in the markets. He writes that newsletter, like I said. He trades the markets, and he has a wealth of information. Whether it's, he does a little bit of technical analysis, but he also understands fundamental analysis. He believes in the thought process of common sense, and that's, of course, very, very important in trading. So once Jack calls in here, unfortunately, hasn't called in yet, we will get started. But again, I would urge all of you to sign up for his Currency Currents newsletter. Go to blackswantrading.com, and you can get that newsletter. Jack will be talking about the intermarket relationships and why it matters to currency investors. As I said, he's the president of Black Swan Capital, and I am the director of education at the International Securities Exchange. The risk disclosure document, very important, just to understand that neither the ISE nor Black Swan, we're not responsible for any of the anything that Jack says today. Jack's not making any recommendations, so Jack's going to give broad overview of the market, but he's not making any specific recommendation. A little bit about the ISE FX options. They're accessible through your options broker. They're exchange-listed securities, cash settled in U.S. dollars, European-style exercise, and they can be traded as spreads. And I'll just go through a little bit more about the currency pairs that we have. You'll notice that we have many currency pairs. So it's the dollar against, let's say, the Australian, Brazilian real, British pound, Canadian dollar, euro, Japanese yen, Mexican peso, New Zealand dollar, Swedish krona, and Swiss franc. We either have them in per U.S. or in U.S. So we started as a dollar-based currency product, but now we also have some of the products are in U.S. So if you're used to the spot market, you know that it's Aussie versus the U.S. dollar, and that symbol is AUM. These symbols are very, very important. You would type these into your equity options account. So whether it's AUM, GBP, which is the British pound, EUU, very popular one, and the NDO. And if you're looking at the U.S. dollar base, they would be over here. All these symbols are dollar based. So if you were bullish on the dollar, you'd be buying calls there. If you're bullish on, let's say, the Australian dollar, you'd be buying calls in AUM. So it all depends. Jack, I see you, although the phone is not, for whatever reason, I'm not sure if you didn't type in all the, oh, excellent. Jack is in the room.
Sorry, Steve. Sorry,
Jack.
everybody.
Happy New Year.
Thank you. A little bit of technical Murphy's Law here today. Sorry.
Jack, how are you?
I'm fine, thanks. How are you, Steve?
I'm doing great. I'm glad you could join us today. Really appreciate it.
Yeah, my apologies again.
Oh, no problem at all. Let me just give you the ball, and you're good to go. Thanks, Jack.
Okay, great. I heard Steve giving the introduction, and just want to say thank you for the ISC giving me the opportunity to speak about this today. We've done, Steve and I have done something like this in the past regarding intermarket relationships, and I heard Steve say that we use common sense in our trading, and really when you look at intermarket relationships, I guess that's the biggest thing you can say about them if you had to put it in a sentence. The intermarket relationships and the evaluation of intermarket relationships really is just common sense. This isn't a holy grail, but it's something that you have to look at and think about. I think all of us have gotten conditioned to, to pull up a chart and throw on whatever analysis we have, our particular technical indicators, our Elliott wave, some holy grail that sometimes we often tend to believe in. Sometimes it works, sometimes it doesn't. But the beauty of using the intermarket relationships, I think the beauty of it is it forces you to think about these relationships, and a lot of times you can see these things setting up because of these intermarket relationships. People have to do things and make decisions, and money flows all around the globe, and it flows in and out of asset classes, in and out of regions, in and out of countries. And if you look at it that way, often you can see stuff because of these intermarket relationships that will validate, I think, and strengthen the technical analysis you do. That's how we use them. And often you can see stuff setting up ahead of time, or at least what appears to be setting up ahead of time. You never know, and we never know, who's the leader, who's the follower in intermarket relationships, but it forces you to start thinking about this stuff in common sense terms. If the bonds are up and they're real strong and the prices are up and the yields are down, maybe people are running for safety. How does that impact the stocks? How does that impact the commodities? That's the way I think a lot of just intuitive traders look at the market every day. They just see what's happening in different asset classes, and it's no different than using the same type of thing in currencies. I have a few charts here that I'm just going to talk about, just kind of the general of what, this intermarket analysis is, at least the way we look at it and the way we use it. There's actually a lot of, some good books written on intermarket analysis. I think it's John Murphy, and Steve may correct me, I think it is, wrote a good book on intermarket analysis many years ago. So this isn't something that's new. It's something I think that, old school traders have used for a long, long time, because as Steve said, it's a little bit of common sense. We always want to be able to anticipate, or at least use the, some ability to anticipate in our trading. I think it is always helpful, and I think this is the single biggest opportunity to help us, provide some anticipation of things that are setting up in front of us, and then validate it with our other tools or technical tools that we use. Okay, enough said there. How does correlations and this whole idea of currencies, what is it? And I think ultimately, this chart kind of sums it up and sums up what we do, I guess, and I think what most people do in the currency world when they use intermarket. You're simply comparing all these multiple asset classes. Sometimes these asset classes may be international asset classes, and I'll go through exactly what we look at, and you can see the breakdown. You're just comparing these things together. Primarily, we use the U.S. dollar index as our primary tool, but we look at these other asset classes against all the currencies or the major ones that we trade. You can, and I have a slide in here that talks about breaking currencies into different buckets: the savings group, the trading group, the commodity group, and I'll show you that, which means you don't have to look at every single currency in the world against these. You have to look at maybe just the main currency in that group against these other asset classes. For example, the euro would be the lead currency to use in terms of what's called what we categorize as the savings currencies, which are the old line currencies, the older demographic types in Europe. The pound, the euro, Swiss franc tend to move together. The pound obviously moves in its own orbit sometime, but I'll get to that in just a second.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.